Hi, Matt. It's a pleasure to finally talk to you. I've been following you for a long time, and I'm truly looking forward to talking to you and get to the depth of your knowledge.
Mhm.
And the first thing I wanted to ask is it's not personal, but it's about you
Mhm.
because I have my journey. I didn't learn about money or inflation the way we understand it today in school.
Mhm.
What was your journey? You were trained as a lawyer, you worked as a hedge fund manager, you worked in a family office,
Mhm.
and now you're, I guess people will call you gold bug, but I'm not too
Yeah.
fan of that word.
Yeah.
But
Yeah.
was it a book? Was it a colleague? How did you kind of get this epiphany, if I can call it
Mhm.
that, regarding
Mhm.
money as such?
Yeah, it's an interesting evolution for any of us. We all have our different, river to precious metals as a wealth preservation asset. That certainly Egon as a mentor and then as a colleague drilled into me very easily. But like many Americans, I come from a binational background. I lived half of my life overseas in Europe and the other half in the US, educated primarily in the US. But the German side of my family, as a young boy, I remember hearing stories of the war, like anyone in Europe, from Norway to, to the south of France to Eastern Europe, etc. Anyone who has family members who lived through that war, talked about the aftermath of that war, or even what preceded that war, had stories, many different types of stories. Most of them were horrible, but certainly currency was on their mind too. My grandfather would always say, the only real wealth is land, gold, and art. And that's a very important theme in Switzerland too. And that kind of was just, yeah, I'm 10 years old, 8 years old. That kind of stuck in my head, getting silver coins for my birthday and wasting on a Snickers bar, like totally immature. Like they would give me silver coins. I'd go to the gas station and use it to buy candy. It was terrible. But, that stuck into my mind. But growing up in the US, of course, everything was, Gordon Gekko, Wall Street, the movies, the hedge funds, the banks. When you're in undergrad in the 80s or the 90s, your dream job was Goldman Sachs and then eventually a hedge fund and then buying the house in the Hamptons and all of that nonsense, which, of course, when you're in your teens and 20s, that's a big siren. It's a very seductive thing. So I kind of came out of undergrad with a kind of cynical understanding, though, of money already, a kind of a cynical understanding of history, yet that young, ambitious, arrogant greed that comes in your 20s. Out of law school, my best friend then and now came from a very wealthy family. He was an investment banker who did really well. He had some support from his father. We started a hedge fund during the dot-com bubble. And so being very amateur but very well timed and well connected, we were able to get into some IPOs, pre-IPOs from Goldman Sachs that had underwritten those IPOs. Long story short, one of them was a real home run, kind of like a Bitcoin home run circa 2013. This was the era of Robbie Stevenson and these IPOs every 10 seconds. And there was a lot of dumb money being made for dumb people, young people in the late 90s. And I was one of them. And the reason I mention that isn't to brag about being a lottery ticket winner, but it does force you to have responsibility for money at that point. Once you have a little, then you have the high class problem of trying to think about what to do with it. And at first, we had established a single family office, and then later I worked with a multifamily office. But during that time, I had the responsibility of not just my own money, but other people's money collectively to invest it. And still, this is 2005, 2006, 2007. You're still looking at the standard usual suspects, the private equity, the credit pools, the long short hedge funds, the credit equity hedge funds, the multi-strat hedge funds, the alternative investments. That was your way. It was the trained way in America in particular, to look at how to grow your wealth. And that's what I did. I spent my time traveling all over the world interviewing hedge funds. Most of them were in New York, but of course some were in London, some were in Chicago, some were in Asia. And when you have a collective amount of assets under management, people take your calls. So I got to get educated from some of the best and some of the worst investment managers around the world. And it was a fantastic education. And I started to understand how the central banks work and how the markets react to the central banks and how currency works. But I was still a risk asset guy, stocks and bonds, stocks and bonds. And I'm condensing a lot, but at some point, at some point I started to realize that I'm measuring my wealth and our clients' wealth and our partners' wealth in a paper currency. And I had to think about that. And I had written a book in 2019 called Rig to Fail. It became a bestseller. It was really just more about risk assets and allocations, diversification, diversification. And it was, it was a very good, I think, primer for the average reader on how the central banks and how commercial banks manipulate markets and how I saw it. It didn't mean there weren't things to be done in stocks and bonds, but I had real concerns about bond market risk and the inflation of the bond market and the devaluation of the dollar. And around that same time, gold kind of started to creep into my mind, not as some ancient pet rock analog dead asset, but as a critical asset. Because whatever your wealth is, again, whether you're a carpenter, a brain surgeon, a hedge fund manager, etc., you're still measuring your wealth in a local fiat currency, whether it's a Norwegian kroner, a US dollar, a Canadian dollar, an Australian dollar, a euro, etc. And I've always said, well, that is like a very beautiful ice cube. It has a nice symbol on it, but it's slowly melting. And I got past the problem of trying to think about how to make more money or beat inflation with the equity markets and how to preserve whatever I have or our families had. And it made me think about gold. You can't ignore it. You can't ignore it. And that's a long answer to a short question, but that's when I started listening to not gold bugs, to your point. I don't think it's the real gold investors are not gold bugs, they're gold conviction and their common sense. They have a fundamental understanding of the markets. You have to. You have to have a fundamental understanding of bond markets and currencies. And then you become a gold conviction. And that's what Egon von Greyerz was. I started listening to him, and then we eventually forged a relationship where it became a working relationship because I wanted to be in an asset class that I believed in. I mean, I could be flogging bonds right now for Goldman Sachs, but I wouldn't feel good about it.
Yeah.
And but I understand people need to make a living, but there's a point where you don't trust the asset anymore. And it doesn't mean you can't get returns on the markets if you understand them. It doesn't mean you can't go long or short. Very few people do it well. But rather than get in the complexity of trying to always be one step ahead of the market, long or short, credit or equity, I just thought, well, I'm in a position now where gold just makes the most sense. And this was when gold was below 1600. So it wasn't about trying to speculate on the price of gold, although that certainly matters. It was more about I understood through Egon and others that regardless of where the gold price goes, it holds its value better than paper money. And so if I got to insure my life, insure my home, insure my car, insure my health, I certainly need to insure my money. And it was a very simple move at that point.
Yeah. Yeah, it
And then
is.
and then of course that evolved into many other areas, but it's all coming back to gold and coming back to currency risk. We have many good partners at Von Greyerz, Egon, myself, Johnny Beck, Johnny Haycock, Jan. We all came from banking in some direct or indirect way. I mean, we understand how banks work and how prop desks work and how equity markets work. We're not anti-speculation, but we're speaking to that part of the world that's interested in preservation more than speculation. And I have nothing against speculation. I acquired the freedom to make the choices I have because I speculated in my 20s and got lucky. But wherever you are in life, speculation or not, you still have to preserve your wealth and you still have to do what your central banks aren't doing for you, which is insure that wealth, which means some allocation to precious metals, not to get rich quick, but to avoid getting poor. And that is my evolution really
Yeah.
from young American dream, Wall Street, hedge fund Superman to understanding sound money, risk, and then really recognizing the historical importance
Yeah.
of gold as an insurance asset against dying paper money.
Yeah. And I remember in my early days, then some years ago, I watched a video with Egon von Greyerz and Grant Williams, I think it was.
Hmm. Hmm.
And it was early on my journey, if I can put it that way. And I remember Egan said, "Well, if you have fake money, you get a fake society." And I thought, what? I couldn't make sense of that because I hadn't gotten far enough. But
Hmm.
I haven't done this for a few years. I understood what he meant.
Hmm. Yeah. Egon and Grant together are a powerful pair when they sit down. And really, it's interesting you mentioned that because Grant Williams is someone who has earned a lot of respect in the field because he's blunt, he's very informed. He doesn't have a horse in a race. He's not selling his book. He's extremely studied in the markets and in risk and in currencies and in bonds. And he came to gold in the same way most of us do, through understanding it better. And when he and Egon got together, I was watching those two long before I joined Von GREYERZ. I was watching them, and it made so much sense. It wasn't a sales pitch to me. It was an understanding of history and math and money. And it is a fake society. It is a fake wealth. It is a temporary prosperity when you're measuring your wealth in risk asset or inflated markets and a debased currency. But that's a real dangerous way to look at the future. If you think the next 10 years are going to be like the last 10 years, if you think the temporary prosperity of debased money is real prosperity, if you think debt is a solution to debt, that's a scary direction. That's like a credit card binge where you're enjoying the credit card, but you're ignoring the day it's due. And it is fake. And I think it's also fake to measure success just by money alone or wealth alone. I think that's fake. I think success, as Egon and I have said many times, is, and believe me, Egon has been extremely successful with gold and with banking and with being the chairman of a FTSE, 100 company. He's extremely successful. He understands these risk assets and these markets and these banks, and he certainly understands great wealth. But his real wealth is invisible. It's like Saint-Exupéry said, it is your connections, your family, your friends, art, nature, books, whatever that is for you.
Yeah.
If you don't have that, and I've seen what Oscar Wilde describes as the strange poverty of the rich. I've been around the ultra wealthy pretty much my whole life, from boarding school to today. I'm not apologizing for wealth or making wealth or seeking wealth or having ambition. But one thing that wealth teaches the wealthy at some point is that is not in and of itself enough to be satisfied by life. And to be fake is to not see that. And to measure your wealth in an ice cube is also fake. And to call success just wealth to me is very, very fake. And I think Egon was trying to say all of that in one way. And he certainly speaks what he believes and believes what he lives.
Yeah, but it's a long process, and we all. I mean, you cannot understand this in just one go. You have to kind of get small pieces of information along the way and put it together for yourself.
Yeah.
And in that respect, I enjoy reading. Is there any book that meant something for you? I think there are so many good books out there regarding this topic. Is there anything that meant something to you, did something to you?
In terms of financial markets, you mean? And
No,
not
no,
the
I mean in terms of understanding sound money, gold, what
Yeah,
it does
look.
and doesn't do.
Oh, it's interesting. It's no coincidence. It's a coincidence. From my hometown in Michigan, there was a congressman who became the head of the budget office under Ronald Reagan, a guy named David Stockman. He wrote a book called The Great Deformation, and it talks about the evolution of bubbles and QE and this nonsensical notion that you can print money to monetize debt. He was way ahead of the MMT criticism. He was way ahead of certainly other politicians. But that book, The Great Deformation, was one of them. Um, uh, it's dense, it's complex. You have to have a little bit of a Wall Street understanding because uh, Stockman really wrote for Wall Street. It was a large tome. It was this thick, but it really took you through the 80s, the 90s, the bad M&A deals, the bad private equity deals, the market bubbles, the response to those bubbles with real detailed case by case, example by example, that after you put that book down, you become, whether you're familiar with Wall Street or not, you become very familiar with how the sausage is made. So I think The Great Deformation was one of the first books that really got me thinking. And Egon and I wrote a book called Gold Matters. I'm not saying that's the seminal book, but even when I was in grad school, the Austrian school wasn't taught at all. Von Mises, Schumpeter, it doesn't exist from Harvard to Wharton to community college. It just doesn't exist. We are Keynesian all the way. And it's, I think, deliberately omitted. But certainly reading Von Mises or reading the articles from the Von Mises Institute, that also, without becoming ideological or evangelical about it, it's common sense. When you debase the money to monetize your debt, that leads to the destruction of nations. And when I was a grad student, when I was in grad school, I was taking a philosophy course about David Hume, who was a kind of an esoteric philosopher. But like Pascal and many others, he was at first a mathematician. And if you go back to the 1750s, he wrote excellent books. This is during the John Law era. This is pre-1789 France when they printed money and destroyed their empire. He wrote some fantastic pieces about sound money in the 1750s. So we've had warnings for a long time. We've had
Yeah.
warnings for a long time. I think David Hume, David Stockman, von Mises, these are all really important books, important authors. And I also think the U.S. Constitution, which was written in 1789 or passed into law in 1789, understood sound money. If you read the articles or the letters of Thomas Jefferson and the warnings about central banks, there's and I learned that in law school, studying constitutional law about Article 1, Section 8 and 10, that sound money is gold and silver. And these founders of the U.S. experiment in the 1780s and 1770s were very much aware that you write a constitution to protect the governed from the governing because they had a fundamental distrust of government. Ironically, the founders of the U.S. government had a distrust of government, and they created Article 1, Section 8 and 10 because they were very distrustful of a government that would eventually debase its currency, which would destroy the civils, which would destroy the middle class or the workers or the governing or the governed. And of course we've killed that. You fast forward 250 years later, we don't have sound money in the US. The Constitution has been chipped away at legally and politically so that we don't have gold and silver as a chaperone to our money. And what do we have now? Inflation to the moon, a dying middle class, and a government desperately looking for ways out of this debt trap, which was warned about 250 years ago. So whether it's our founding fathers, David Hume, David Stockman, von Mises, there's a lot of great books and great insights throughout history. If you
Yeah,
understand history and math, you'll start to understand gold.
I agree completely. And it's interesting you mentioned the Constitution from 1789. That was the Continental, right?
The U.S.
Uh,
Constitution. Yep.
but you had the Continental before that, the
Oh yeah.
currency
Oh, our
Continental.
currency. Yeah, yeah, yeah.
And then you had, yeah, the currency. And then you had hyperinflation, I guess. And
Well,
that, I
that's
think
what. Yeah.
that's what kind of triggered it, right?
Well, the
I,
real turning point after the Revolutionary War, after we won that, then we had the Continental, and then what really was the big tipping point was the U.S. Civil War in the 1860s. Of course, wars are many horrible things, but they're also very expensive. And during the Civil War, under the Lincoln administration, we issued what are called greenbacks, which is paper money. And that was a temporary war measure. And even though it was very controversial, the Supreme Court at the time said, look, this is a war measure, but don't worry, these greenbacks will never be a reserve asset. They'll never be a legal tender. And after the war, we'll pay it back in gold parity. And after the war, after the Civil War, they had what was called the Resumption Act. They resumed the parity of gold, but the Supreme Court was already backing away. They said, but here, by the way, we can print money whenever we want. We can create greenbacks whether there's a war or no war. So there was a slow dilution already happening. And then we had the famous gold clause cases in the 1930s when FDR came in and took away, confiscated gold, revalued the dollar, repriced gold. And even during that time, they were called the gold clause cases where the Supreme Court was asked to say, what about bonds? Shouldn't bonds be held in parity to gold? They said, no, it doesn't matter because our dollar is just as valuable today as it was then. We don't need a gold backing. That was just simply dishonest. And of course, at the end of the day, the suspense was killed in 1971 when Nixon just took the gold off altogether. By the way, completely anti-constitutional. We can get into the weeds on that, but as somebody who studied for 3 years, it violated the Constitution completely. But Nixon said in 1971 that they said in the 1930s, don't worry, our dollar is just as valuable today as it was tomorrow as it was yesterday. Well, we've lost 99% of the value measured against gold since 1971. So that was a lie. They also said in 1971 that this decoupling would be temporary, but that's over 54 years ago. So again, what the politicians and courts have done to the Constitution, to the dollar, through necessity, which the necessity is trying to pay their debt. They can't have it pegged to gold because the gold would stop them from printing more money. So they just got gold out of the way. And that did buy temporary prosperity. It got them reelected, but it just postponed what Schumpeter at the Austrian school called constructive destruction. Because the more you postpone and the more you solve debt with more debt, the bigger that debt volcano becomes. And when it does erupt, you have desperation. And in the meantime, you debase the currency. So you really are giving an invisible tax to the man on the street. They don't see the slow, frog boiled, death by 1,000 cuts destruction of the purchasing power of this fiat, useless paper money. And that's not even a gold bug argument. That's undeniable, quantifiable, objective reality. And that's, to your point, it becomes really discouraging to hear gold bugism. There is a lot of hype in the gold markets or in the gold space and certain gold pundits. But really, when you slow down, take a deep breath and look at the facts of currency debasement, the facts of what governments and central banks and courts have done to real money, which is precious
Yeah,
metals, and replaced it with paper money, which is really a joke over time when you
yeah,
debase and expand the money supply. And we can debate about inflation all day long, but you expand the money supply by 7x in 20 years. I've said it 1,000 times. It's like adding lots of water to an otherwise very good glass of wine. Eventually, you destroy the flavor, the power, the punch, and the impact of that wine. And by expanding them to money supply globally, and particularly in the US, you're just debasing, diluting, destroying the paper money. And it happens slowly. So you don't see it until you feel it. And the vast majority of citizens in Norway, Sweden, Europe, America, Michigan to California to Florida don't understand currency. They don't understand bond yields. They don't understand debt, as they should. They do other things. They're involved in things. They trust their government, their central banks, et cetera, to take care of them. And they don't see, or haven't seen, at least until recently, that, like the founders of our Constitution, don't trust the government too much when it's violating its own principles.
I agree. You completely. You pointed or you went through kind of briefly the history from the Constitution up until today, and if only we did learn history the right way, where the money kind of learn about the money side of history as well. But we don't. We have to do the work ourselves. But I want to. We have to also get to the point where I have to get to the point where we talk about the market today. But before we get there, I want to ask you about definitions, because I believe part of the reason we're in this mess we are today is because we do not understand the words as they should be understood. We've kind of tweaked the definition of terms.
Mm-hmm.
So regarding gold, is gold money or is it an investment? Because it can't be both at the same time.
Well, certainly, it's important to break these things down carefully. I mean, technically, the definition of money is a store of value, a medium of exchange, and a unit of account. So can you take a gold bar into a Volvo dealership and buy a car? No problem. No, you can't. So it's not a medium of exchange today. So you could argue it's not really money, it's an investment. Because if it was, I mean, now again, it depends on which historical window you're looking at. When we had a gold-backed currency, technically your currency was redeemable in gold. So gold was money in certain periods of time in certain countries. And then as those certain countries got more and more in debt, they decoupled or debased it from gold. And then money was just whatever they told you it is, paper money. Fiat money just means whatever the government says it is, basically. But technically, no, gold is a store of value. Absolutely. It holds its value far better than a paper dollar. But is it money as a medium of exchange right now? Do you use it to transact in the US or Europe? No. What's happening, though, what we do see is it actually is a medium of exchange in other parts of the world because they're net settling trades with gold as a chaperone. This is, and we won't get too much into the weeds if you don't want to, but the BRICS have been doing this for years, and they're already seeing versions of this with the oil trade. And we're seeing this with China and Russia, where Russia will sell oil to China. They'll take yuan for the oil, and then they'll take that yuan and go to the Shanghai exchange and convert it to rubles. And they'll take the difference in gold, and they'll go to the Shanghai exchange and convert rubles. So in other words, they're using gold as a settlement asset. So in a sense, it is becoming a medium exchange. And the BRICS are doing this across the board in their current trades as well. They wanted to make it official last year. It hasn't gotten that far, but it's certainly happening as we speak. Gold is being used to net settle trades with the local currencies, which they don't really trust, whether it's a rupee, a real, a yuan, or a ruble. but they do trust the gold component of it. So they'll use that to net settle trades, including oil, but other assets as well. So in a sense, gold is being used as a medium of exchange. Um, but technically, it's not money. Money is what the government says it is. Money is the Norwegian kroner, the euro, the dollar, Australian, Canadian, American. That's what the government says it is, backed by the full faith and credit of your government, but not backed by any precious metal, hard asset, store of value. So basically, what we have is a currency, which is the Norwegian kroner or the euro, and what we have is money, which J.P. Morgan famously said, gold is the only money, the rest is debt. But officially, it's not money treated by any government as of today. It is an investment, but ironically, it is an investment to protect your money if you understand gold. In a sense, when you buy gold, or when I buy gold, or Egon or any of our clients or anyone listening buys gold, they're doing what their central banks won't do for them. And so they are using gold to protect their money. In a way, they're using gold to back their money. So they are basically using gold as money to
Mm.
insure their money. So it's kind of convoluted, but on a purely definitional phrase or academic way, gold is more an investment than it is money, but it's an investment to protect your money. So it really is becoming money. And in terms of emerging post 2022 sanctions, gold actually is being used as a medium of exchange, as a unit of account. And it's certainly a store of value that it always has been. And we can talk about Bitcoin and other things. It's not, as of yet, a store of value by any stretch of the imagination based on its volatility. But a simple example is when gold was $20 an ounce in the 1920s, the average home price in America was $5,000. So if you had 250 coins in a shoebox, you could buy the average American house, which was 5,000. If you took that same shoebox from 1920 and kept it on a shelf, fast forward to today, those 250 ounces wouldn't be worth 5,000. They'd be worth over 700,000. So you could still buy a house today with the same coins you had in 1920. But if instead you just put $5,000 in a shoebox from 1920, that wouldn't even pay for the down payment. So you see how gold is a store of value. It's so unsexy. It's so ignored when we're looking at NVIDIA or Bitcoin or other things, which are all fine, but it's clearly its role is to hold its value more than those dollars from 1920.
Yeah.
And it's just, there are so many examples of how gold is just clearly the store of value. And that explains why central banks are stacking gold right now at record levels. Not because they're trying to get rich, but they see the writing on the wall, the debt in the US, in the West. They see how unsustainable it is. They see that there's going to be more devaluation, more tricks. And they're basically, as I said many times, it's like getting your shovels before the snow, getting ready before the winter. They see an avalanche of debased money already. They've been seeing this for years, but now it's accelerating. And they're stacking gold not to get rich. They're stacking gold because the world's changing and paper money has less and less power. And they want to get their shovels before the snow. And that is why we're seeing just unbelievable changes in the gold market, not just central bank purchasing in the East in particular. And that is why we're seeing these outflows out of the COMEX exchange in New York, which was meant to be just musical chairs, just keep extending these contracts forever to short the gold price. Well, now the gold is going out of the COMEX for physical delivery because the counterparties are no longer interested in musical chairs and churn and burn. They're interested in physical gold. Why? Because they understand more than the man on the street that paper money is losing its value. And if the man on the street understood what the COMEX was or what central banks in the East are doing and why,
Yeah.
they would be doing the same for themselves. Their governments won't. Norway won't. The UK won't. So individuals have to get informed and they have to do this on their own, sadly. And very few understand it. The gold price is rising now mostly because of central banks, not individual men on the street buying or women on the street buying. But I have good friends in Austria, friends from Germany whose grandparents taught them to buy gold all their lives. They've been doing it. I know guys
Fantastic.
in their 30s who
Yeah.
are buying gold. I love it.
Yeah.
I love it.
Fantastic. But can you, the things going on with the LMBA story, the comic story, I read something yesterday, I think it was, about a whale standing for delivery on comics. I think it was last Friday. Can you
Hmm.
just break these things a bit down?
Yeah,
What is happening?
yeah.
Because initially, not initially, but gold has been the center of attention in the East. But now, all of a
Hmm.
sudden, this year,
Yeah.
it's in the center or at
Yeah.
least in our world, center of
Right.
attention.
Yeah. Well, necessity is the mother invention. Most governments and politicians don't figure things out till it's too late, really,
Mm,
especially in the West, because the West, I'm using broad generalizations. Western politicians only think about one election cycle, one power cycle. They don't even think a generation ahead. They're incredibly selfish individuals in general. There are exceptions. Most public servants are self-servants, and the easiest way to stay in power is to promise more than you can deliver. And if there's a delta between your promise and what you can deliver, and you need more money, you create that money out of thin air. And you don't want gold. You don't want to hear about gold. You don't want to talk about gold. You want to keep gold out of the conversation. And as a political party power individual, you will just keep debasing your money because that feels good in the short term. You can meet your promises, so to speak, but you're doing it with an addiction to an asset, a currency, and a treasury or a sovereign bond that you're debasing. So you're giving with one hand and taking away with the other, or you're stroking the cheek while punching in the gut at the same time. It's a real fascinating process. And so in the East, again, I'm talking in broad strokes, these are cultures and economies and populations used to suffering, used to control, and used to long-term thinking, though. And I'm not pro-China or pro-Russia or pro-East. I'm very much a patriot in the West, but you got to give credit to credit's due. They've been thinking generations ahead, whereas again, the West really thinks about 20 seconds ahead, one market cycle ahead or one election cycle ahead. And now, as the debt levels in the US, the home of the world reserve currency, and as the debt levels in the West, in the G7, become so transparently grotesque, the East has seen this for years, and they've been collecting their shovels before the snow for years. Now, the narrative is harder to control in the West. Everyone sees the debt. Now, politicians are even talking about it. Scott Bessent, who's our Treasury Secretary, is admitting that we have a debt crisis. Trump, whether you love him or hate him, admits that we have to cut spending. The good, bad, or the evil of that we can get into. But, you know, the disaster of politics in the UK or in the European Union fiscally are undeniable. Shouldn't be left or right. It's math, it's balance sheet, it's debt, it's unsustainable. So the answer is the East has known this. This is why they've been de-dollarizing since 2014. The West is just no longer able to hide this anymore. It's too in front of them because of alternative media, because of platforms online, because of the kooks and the crazies and the smart that come out online and educate the masses who are now going online rather than their legacy media, especially in the US. It's completely dead to them now. They've distrusted the legacy media. So there's more and more awareness now that we have a debt crisis. So the question is, how do you solve this? Some will say Bitcoin and the new oil and the Bitcoin dollar trade pair, or the Bitcoin tether trade pair. But really, and that's another discussion altogether, but one thing that's non-debatable is that gold is a protection, that gold will prepare you for that debasement that's already in play and it's going to get worse. And so the East has been, I joke, but it's true. Indian housewives own more physical gold than the UK because Gordon Brown got rid of it in 1990, thinking that England was fine. That was incredibly short sighted, stupid, arrogant, and certainly who's in charge of the UK now is no better. But they do realize, wow, everybody else is rearming in gold for a financial crisis, and we're not. And suddenly there's this panic, and suddenly there's this understanding of gold. But it's very bipolar because if a government openly admits the need for gold and the gold price goes up, that is admitting that your fiat currency and your debt based growth system was a failure. So it's a very paradoxical situation to be in because it forces politicians to either be honest or get real or keep lying. And when you talk about revaluing gold or buying more gold now and watching gold hit all time highs at a relatively rapid scope and pace, there was always a fear from the 70s on that gold would move too high because that is a screaming sign that you have failed in your monetary policies at home. And politicians are pathologically incapable of admitting that they were wrong. They'll always come up with an excuse, a war, a counterparty, an extraneous event to blame the financial crisis in their country when the fault lies right in the mirror of these politicians who either didn't understand gold or sound money or chose not to, or even worse, understood it and lied about it. Whatever the excuse, it's unacceptable. And now they're trying to race to get delivery and get physical gold, to see the writing on the wall. They see the snow coming, and they're really trying to get those shovels. But they're way behind China and Russia and the East. And it's almost pathetic what they're doing. And yet, there's other tricks they have up their sleeve, plenty of other tricks to try and avoid a crisis in their currency and a crisis in their sovereign bonds. And we can get into that, but they see the storm clouds coming, and they're suffering the hangover that von Mises wrote about in the 50s, or Schumpeter talked about, or David Hume wrote about, or Ernest Hemingway talked about. They're seeing that all these martinis, all these alcoholic binges on printed money to solve debt crises and buy elections is now the hangover stage. Now they're starting to get sick. Now we have inflation. Now we have currency debasement. Now we have debt that no one wants to buy. And we live on debt, and no one's buying our debt. What do we do to create demand for our debt? Or how do we protect the debasement of our currency? And in the West, they're having a hard time admitting failure and admitting the need for more gold. And in the East, they have no problem seeing the West implode upon itself. And so they're stacking gold, just like an army would stack ammunition before war. You don't declare war if you don't have gunpowder. And you
No.
don't go into a financial or trade war without gunpowder. And the gunpowder to keep your currency relatively competitive is to have it backed with precious metals to ensure against the debasement of it.
Yeah, but you mentioned gold revaluation. There has
Mm-hmm.
been a lot of talk about, and I've seen all kinds of numbers.
Mm-hmm.
So the gold price is today a bit north of $3,000,
Mm-hmm.
3,100,
Mm-hmm.
3,100.
Mm-hmm.
I've seen 20,000, 30,000. I think Andy Schechtman talks about $142,000
Mm-hmm.
gold revaluation. But that was, I mean, I feel that a lot of people talk about the gold revaluation as an event, something that's
Mm-hmm.
going to happen someday.
Mm-hmm.
What if the price manipulation of gold and silver, for that sake, slowly has ended, and they let the gold price just float higher,
Mm-hmm.
and let that be kind of the gold revaluation. Let gold do the work itself.
Well, in a way, it's happening whether they want it to or not. And there's a
Yeah.
lot of different ways to answer that. I mean, what we're seeing with these whales taking gold and silver off the COMEX, if the gold isn't on the COMEX anymore, that means they can't lever the gold to put net short to bet against gold every morning at 8:30 in New York. Because if you don't have the gold and silver on your books, you can't go 4% physical gold, 96% paper leverage and short it because you don't have enough gold. Post Basel III, you don't have enough gold. So that game of fixing natural supply and demand forces is ending. That is one way gold gets more natural price discovery. That's one way. The government could, by declaration, just declare a new value. That's less likely. To your point, just let gold do its natural thing. But this is why the COMEX was created in 1974 with gold, because Kissinger knew very well, and Volcker and others, don't let gold have natural price discovery. We just decoupled from the dollar. We need gold to stay down. That was their biggest concern, was a roaring, ripping gold price. So they created a petrodollar, they created a COMEX, other things to keep the dollar strong. By the way, all those things are falling apart now. They're
Mm.
falling apart. But you can see their concern. If gold rose too fast, that would make the dollar depeg from gold in 1971 look like a failure. So they've bought time. They bought 50 years of time, but it's failing. And to your point, they will just let natural supply and demand will get more and more real as the COMEX fails, which it's failing right now. And the other thing that's, you could say, well, we have these gold certificates that have been on the Fed balance sheet. They're marked at $42.21 or 22 cents. So if we just revalue it to market, well, then we could at least get, of our 8,131 tons of declared gold, which could be more, could be less, probably less. But if we just mark our current gold holdings to market, well, then we'd have about 800 billion based on the current market value. We could use some of that to pay down debt. That, Scott Besson says, isn't going to happen right now. It will probably happen. That's not really revaluing gold. It's just marking gold to the current market price based on the certificates the Fed holds. That's not a fiat declaration of a new value. But even if they did that, and they probably will, and we're speculating, but even if they did that, 800 billion, sadly, is nothing anymore. Nothing. I mean, we printed that much money in 2020. We can do that. That's nothing. That will not, that's a band-aid solution to an open knife wound, but it's something. It's optics. Um, when people talk about gold going to 10, 20, 30,000, again, we're all speculating. That's if natural price discovery, real supply and demand comes in, and we get rid of these exchanges and we get rid of the price fixing and these huge, huge multi-billion-dollar daily shorts, which are legalized under COMEX rules. But again, the COMEX was created purely, in my opinion, and Peter Embro, WikiLeaks, this is all out there. Anyone who understands commodity trading and what happened to the Merc when Leo Malamud came in and Milton Friedman and a very young Alan Greenspan, this futures market in precious metals was designed to price fix gold. That's clear to me. And that tool, that COMEX tool, has less and less power each day that goes on. Each day you see these whales taking delivery because it was not meant for delivery. It was meant for extending and pretending. This is a radical shift in the gold price, just like 2022, February, March of 2022, and we weaponized the world reserve currency was a radical shift in the future of money and currencies and trust in the US dollar. Again, the average man and woman on the street would not and does not understand this because they're too busy doing what it is they have to do to get by every day. Very few people have the time to really get into the weeds of what a weaponized US Treasury looks like, what sanctions really meant for the West, how poor of a decision. Whatever you think of Zelensky or Putin, that in and of itself was a disastrous decision to weaponize. John Maynard Keynes warned against this. Obama warned against this, but we did it. It's backfired. And what's happening in the COMEX is a dramatic change in the gold price and in currencies. So these things are very hard to understand if you don't follow it. And that's why it's important. And not just take whatever I say at face value. I mean, do your own investigations, but these things are fairly clear. You can reinterpret those facts however you wish, but the facts are facts. And people understood what are the implications of weaponizing the world reserve currency in 2022, or what we're seeing on the COMEX market in 2024 and 2025. These are radically important changes happening right beneath our eyes, and they're happening for a reason. And the de-dollarization that the BRICS have been doing since 2022, it is a massive event in history, which again, most of the Western media lies by omission. They just don't talk about these things. They just ignore it. And again, whatever you think of COVID, hysteria, reasonable policies, good or bad, you notice how we don't talk about it anymore. It's just gone. Most of us lost years of our lives, years of our freedoms. Many couldn't make it to funerals of our relatives. We were treated like children, and there's no discussion about whether that was good or bad. It's just gone.
Mm.
And when you're walking about when the financial newspapers, the Financial Times, the Wall Street Journal, God forbid the New York Times, which I used to respect, things like the COMEX, things like de-dollarization, these things aren't discussed at all. They just aren't really in any real informative way. And the mainstream legacy media is comical, and that's left or right. It's not a political stance. Most informed people who are self-aware and critically thinking don't get their news from these Ken and Barbie pundits. We just don't. And again, that's a personal choice, but that's up to each person to think on their own. It doesn't mean they have to follow me or Egon, you or Grant Williams, but I would rather if I was going to Rome, I'd rather talk to an Italian to hear about Rome than somebody who wrote a book about it from school. I'd rather talk to the people who understand it. If I were going into combat, I'd want a non-commissioned officer to lead me who's got combat experience. And if I were trying to understand money, I would not go to the Wall Street Journal or the New York Times. Not anymore. And I certainly wouldn't go to CNBC or MSNBC or Telesank or whatever the media is here, which is really owned by a few corporations. The media has failed the people,
Yeah,
like the government has.
I agree totally. Um, Next question. Today is April 2nd, and I think they call it Liberation Day, Trump's Liberation Day. So the tariffs are supposed to take effect, as I understand it, today.
Yep.
You've written a lot about this tariffs, capital controls, which I think you see them as inevitable in some way. What about price controls? Or if you can kind of put all that into pictures, do you think price controls are inevitable?
They'll never
At some
work.
point, it kind of repeats.
Yeah.
The Romans did it, Nixon did it.
Yeah.
It always fails.
Yeah, always. But again, as Mark Twain said, history doesn't repeat, but it often rhymes. We get versions of this. These late stage empires, when they become debt strapped and debt soaked, they become desperate. These policies are desperate policies. Um, the tariffs I've written about, I think we all agree they're inherently inflationary. We have a
Yeah.
goods deficit now that's the worst in our history. So when we shut these price, when we shut the door, so to speak, to foreign imports or charge a huge tariff on them, well, that is inflationary. We don't have enough goods manufactured in the U.S. on the shelves to keep the prices low. So this the timing in some ways couldn't be worse. We should have brought our debt to GDP down first and then maybe use tariffs if we're going to use them at all. We've seen in past examples of tariffs that it actually hurts the country more than it helps the country. In this particular case, the tariffs will be disastrous on an inflationary basis. But here's where I will defend Trump. I will defend what he's trying to do. I think this is whether you love or hate Trump. I understand what he's doing. I think the timing is off. I think Scott Bessent would agree, but I'm just guessing. But what Trump is really doing with these tariffs is a few things. He is worried about a trade imbalance, but when you have a strong currency, you're going to have a trade imbalance. So that's our own currency's fault, not any prior administration. But he is worried about fentanyl coming across the borders from Mexico and Canada. So he's sticking it to them for that. And he also is mostly the most important thing he's worried about, and he is, I think, well intended, is the outsourcing of American manufacturing overseas, whether that's to Asia or Central America or South America. You know, I'm from the Midwest, a lot of farmers. John Deere is our famous tractor. Well, a lot of those tractors are made in Mexico. And those iPhones that we all carry around that have an Apple and Steve, you know, and the great CEOs, well, all those iPhones are manufactured and their parts are manufactured in China. And why? We outlawed slavery a century and a half ago, but slave labor in Asia and South America, relative to salaries in the U.S., still exists. So our very American true-blooded CEO said, "Let's go for cheaper labor overseas." And what they did is millions of Americans in the Rust Belt states in America lost their jobs because car parts, computer parts, tractor parts are now made outside of America because it makes it cheaper labor, better margins for the company, better share prices for the CEOs, better salaries. I'm a capitalist. I'm all in favor of getting rich, but getting rich by laying off millions of Americans and hiring cheap labor in third world economies is not really heroic or patriotic in my view, but that's capitalism 101. And what Trump is doing with these tariffs are not just directed at the Trudeaus of the world, these clowns, you know, they're not just directed at them. They're directed at the CEOs of places like Apple and John Deere. You know what, boys and girls, if you want to sell your stuff, you better bring the manufacturing back into America. And I applaud that. The problem is, and you already see, you know, Apple looking to invest 500 billion, you know, in American manufacturing of Apple components. So I mean, it's working, but the problem is if you're going to bring manufacturing back to America, which I'm in favor of, you're going to have wages that are compatible. That's going to cause, you know, that's going to be expensive. And we're already in debt up to our eyebrows in America. And so these are expensive policies. Long term, I actually applaud them. Short term, it couldn't happen at a worse time in the sense of we're already highly in debt. We have massive budget and trade deficits. We have a huge federal debt problem, and we have inflationary tariff policies, and we have mortgage applications down 60% in America. We have huge middle class suffering from quantifiable distress right now. Credit card delinquencies, car repossessions, 20% of Americans have a job. Their only job is just to pay their rent. So they take a second job to have enough for food. These are not extravagant exaggerations. These are realities, even in the land of America. The middle class is doing terribly. The top 10% are doing just fine. So these policies, which are good to bring manufacturing and coerce these companies to bring their labor back to America through tariffs, because if you're an Apple or you're a John Deere and there's a huge tariff, it's cheaper actually just to come back to America, which is what they should have done all along. But they're just now they're being forced to. So I understand the reason behind the tariffs, but the cost is going to be very high. It's going to be expensive, and at a time where we really have too much debt. So I think the timing is a little off, and Luke Groman would agree with that too. On the other issue of financial repression and capital controls, well, these two are the oldest tricks in the history rhyming department. You go back to ancient Rome, the Ming Dynasty, 18th century France, the UK, the Netherlands during their empires, the US today. Every time an empire, regime, monarchy, democracy gets over its skis in debt, it inflates away its debt. So its inflation rate is higher than the interest rate on your savings. So what that it's negative real rates. But the problem with negative real rates to inflate away debt is you have to have really high inflation. And the problem with really high inflation is that that creates guillotines and pitchforks. That creates unhappy people. So what's the trick? Just lie about the inflation. It's a known fact that inflation in the US today, which is they say around 3%, it's really around 14%. So if the inflation is 14% and the yield on a 10-year bond is 4%, so you're running negative 9% real rates. You're inflating your way out of debt. The masses don't understand that, nor should they. It's complex, negative real rates, wonky math. But governments are doing financial repression. They're having inflation higher than the interest rate intentionally, and they're intentionally lying about the inflation. Everybody on Wall Street knows this. Everybody. It doesn't matter whether it's official, we know it. But the official's never correct, but it's always right because that's what the CPI, Bureau of Labor Statistics, tells it is. But in simple terms, governments in debt will debase their currency to inflate their way out of debt. And that's what we're doing. That's called financial repression. It is a form of capital control. It's an invisible theft. It's a slow destruction of your currency, your currency. And so when you add on top of the dishonest inflation, negative real rates, which is financial repression, then come capital controls. In a way, a tariff is just a sanction. In a way, it's a weaponization of a currency. It's a capital control. The other types of capital controls, which I think are inevitable, are eventually, as there's less and less bond purchasing of US treasuries, they're going to do yield curve control. And they're also probably going to control the flow of money in and out of America if you're an American citizen or you're an American overseas, or how much money can you have here? How much can you wire out there? That's to be determined. That's why I like physical gold, because legally you don't have to report that asset when it's held in a private vault outside of your own jurisdiction. And I think that's going to stick because jurisdictions like Switzerland have a vested interest in their private banking, but private vaults are not private banks. And so they have even better, more privacy rights and legal. It's a legal firewall between you and your country, which is going broke. So ironically, that pet rock, that analog gold, is a safer asset for Americans in particular than it is in any digital form. And again, we could spend hours on how Bitcoin or digital tether or stable coins are not decentralized and not private and not anonymous. It's quite the opposite. It's highly programmable, highly trackable, highly seizable, highly centralized. But going back to your original question, we're going to see tariffs, we're going to see financial repression, negative real rates. We'll probably see capital controls, yield curve controls, and flow controls, which Egon, by the way, wrote about 25 years ago.
Yeah.
You know, this is just history repeating itself, desperate measures.
But I saw the reason, or one of the reasons for my question was that I saw, I think it was from a tweet last week, that Trump apparently has warned US automakers not to raise prices in response to tariffs.
Mm-hmm.
So to me, that kind of, the first thing I think about is price controls. And we see the same in my country. The grocery prices, they've just skyrocketed, and now people, they have felt it, but now it's kind of becoming a thing.
Yeah.
That the basket isn't half full just
Yeah.
compared to a year ago.
Yeah.
And they're blaming the food chains
Yeah.
for being greedy.
Yeah. Well, look, let's take that example. By the way, I was just at the grocery store with my son yesterday. I went and got a Snickers bar. We were joking in front of the cashier. Look at the Snickers bar. It's about half the size.
Yeah.
But it's the same price as the old Snickers bar. It's just half the size. We call that shrinkflation. It's a trick, but that's neither here nor there. It's these desperate tricks. In terms of the tweet about car prices or parts prices, you can tweet whatever you want. There is a reality. I mean, I go to the US frequently. A Ford pickup truck is over $150,000, certain Ford pickup trucks. Again, people are going into debt 7, 8 years on balloon mortgages. And by the way, those pickup trucks are being repossessed at record levels. The pickup truck is the iconic symbol of the American hardworking middle class. Nobody making 70, 80 grand a year with a family can afford a $150,000 pickup truck. That's like a Range Rover or a Porsche. I mean, that's ridiculous. And so the instinct to say, we got to get these prices under control, we got to be realistic, no one can afford these. Okay, fine. That makes fantastic tweet sense. It makes fantastic optic sense. But a lot of these, it gets really wonky because of electric regulations and EV regulations. But okay, but if the parts for those components are going up in price and you're at Ford or GM or Chrysler, I mean, whatever, or Mercedes or Volkswagen in Europe, if the prices for the parts are higher and now you're adding a tariff on top, how do we bring the prices down for the consumer? How do you control? And if you make us control the price, we can't pay wages for the few workers we do have or the dealers that do represent us. So there is no easy solution. It's all connected. If you knock something here, something pops up there. It's like a whack-a-mole game. So you can't just tweet something that you really want. It's going to cost money to make these changes. Again, my long-term view is it's great to bring manufacturing back. It's great to bring jobs back. I would stick a tariff on the CEO stock price rather than on the goods, but neither here nor there. But when you do this, things are going to be more expensive. When Ford has to pay more people in Detroit to come to the assembly line rather than in Mexico or somewhere overseas to build these parts, that's going to cost them more. They're going to push that price onto the consumer. So I don't know how price controls realistically work, because you might get the price controls, but then you won't have the product to actually have the price too. You won't have any buyers or producers of those goods because they'll be costed out, priced out. So it gets econ 101. This is like a grad school debate you'd have in a business school class, a case study. The woeful disconnect between what politicians understand and how markets really work. Most politicians have no history in economics or understanding of law or history. Trump is a real estate developer. That's a certain kind of veteran of a certain kind of combat in New York real estate. It certainly requires a strong backbone and an economic mind. But the larger macro themes here at the cabinet, at the House, at the Senate, they are not understood. And again, they're making desperate headlines, active headlines, which I applaud. It's certainly better than the last 4 years where we did nothing, just take on more debt. And we had a president who was simply not there. Whether you're left or right, that should have been obvious. That's why many Democrats have left the party. We were lied to for 4 years. Our president was not there mentally. We all knew it. They just wouldn't confess it. So who was making decisions? Again, another conversation for another time. But politicians are woefully ignorant of economics. And they're more interested, again, in self-interest. Goes back to our original point. Stay elected, get elected, overpromise, underdeliver. I think Trump, without being pro-Trump, is really well intended in bringing jobs back to America, making America great again, reshoring those jobs that have been offshored since 2001. And that's going to be long-term good, but it's going to be very expensive. And price controls will not solve that problem. Long answer to a short question.
No, I know it won't.
No.
I agree. Okay, last question to you, Matthew, and it's all about trust, and it's the dollar being the reserve currency. It's maybe more rapidly losing trust. It has been losing trust, at least since 1971. But then again, it has escalated since 2022. Is the only way to regain the trust of the dollar and have America kind of participate on the multipolar world, which we see coming, is the only way to regain trust and have America have a seat at that table? Is that in any way to introduce gold back to the system? I know they won't do it by choice.
Mm-hmm.
The only way is to do it by necessity. And how should that play out? A lot of different questions in there, but feel free.
Certainly the trust has been dying in my lifetime since 1971. To your point, when we decoupled from gold, we welched on a promise we made in 1944 to the world that our currency would be redeemable in gold. And we lied about that. It didn't last 30 years. Since Bretton Woods, we welched. And Nixon said, your dollar will be just as powerful tomorrow. Again, lie. And he said this would be temporary. Again, lie. So that was a middle finger to the rest of the world that relied on the US dollar. So that trust was broken. We tried to save the dollar by the petrodollar, and anyone who went against the petrodollar, like Saddam Hussein or Gaddafi, well, they disappeared from the face of the earth. Then we tried to do surpluses where, hey, the oil states, when you get that oil money, buy U.S. Treasuries, that helped the dollar. Even if the WTO, when China was, opened their markets, we had a strong dollar, so they had a trade surplus because they had a weaker currency. At least they were using that trade surplus, they were recycling that back into the U.S. dollar. That was great, because that bought U.S. Treasuries for us. All those systems are breaking down. The petrodollar, recycling the surpluses, all breaking down. Um, when you talk about regaining trust, there's a Loomis bill up for passage in the U.S. House and Senate, which is about making Bitcoin and the dollar tied together, making Bitcoin a strategic reserve asset, even selling gold to buy Bitcoin, which makes no sense at a million levels, but it does make sense if you understand desperation. It's not building trust through gold. They're trying to build it through Bitcoin. Without getting into the details, if you want the biggest, most liquid Bitcoin pair trade is Bitcoin and the dollar. And what this bill is basically trying to say is if you want to buy Bitcoin, you have to buy it in US dollars and you have to buy stablecoin in US dollars. And by the way, those stable coins have to have a reserve of US treasuries. They're trying to create synthetic demand in dollars to buy Bitcoin. They don't care about Bitcoin. They're using that bubble to attract dollars like it's the new oil, like a petrodollar system with Bitcoin. So you would say, how does that regain trust? Bitcoin's very premise is to be anti-government, anti-dollar. And our government is now using Bitcoin Strategic Reserve Act to try and get demand for the dollar. It's so incredibly ironic and paradoxical and insane. So does that build trust? Wouldn't it be easier to just declare gold as a more prominent asset in our balance sheet as our Constitution formed? But again, politicians will not admit that yet. I have no idea whether the Bitcoin Strategic Reserve Bill, it's an executive order to have the Bitcoin that we've seized from, drug traffickers, gun runners, and child prostitution things. That's great. But if they actually want to make it a US dollar backed kind of new oil, it would be far easier to do it with gold. And so the fact that they can't even say that out loud, I'm speculating. I don't know. There's states like North and South Dakota, Republican states that don't want to do this. We'll see. But regardless, you don't have to make it a new gold-backed currency. They'll probably have a global reset. An IMF has talked about a Bretton Woods 2.0 during the height of the COVID hysteria when they had the temerity to insult the world by comparing COVID to World War II. Again, anyone from Europe knows that's an insult to the 85 million people that died and the destruction of lives, not just those that died, but the families that suffered and ripple effects. To compare COVID, which was man-made and imposed, to World War II is insane. But during 2020, the IMF, Christina Georgieva, said this is as bad as World War II. And Klaus Schwab, the WF, this is the crisis of a lifetime. No, it's the opportunity of a lifetime for these kind of people. Because the idea is we're going to have to create an IMF, a Bretton Woods 2.0. We're going to have to reshuffle the deck chairs in the Titanic, rethink our debt, come up with a central bank digital currency. And for that central bank digital currency to have any credibility, it has to be in some way collateralized or associated with physical precious metals, gold. I think that is how gold gains trust globally, because you're not going to get the IMF and the BRICS and China and Russia to all probably agree. We'll have a very multi-dysfunctional disorder. But I don't think you'll see a gold-backed US dollar. You'll see a central bank digital currency in the West with gold as a foundational element to it. So again, these are desperate measures, but you won't probably see a gold-backed dollar. But the IMF basically telegraphed in 2020 what they're wanting to do. And I think that's probably where we're going. So, if the Loomis bill passes, Bitcoin goes to the moon. Gold will still do extremely well as a solid asset. Bitcoin is a politicized, ironically centralized asset, which it was never meant to be. But we'll see. But no matter what, there is a reckoning coming. Fiat money is not going to get better. It's going to get worse. There probably will be short-term yield curve controls, capital controls, financial repression, QE to the moon. And then they're going to admit, like they warned in 2020, we need a Bretton Woods moment. We need to come together, create a centralized digital currency, which is highly trackable, programmable, seizable, and very nefarious, but nothing you or I is going to do to change that. Nothing. It's coming. That train is not stopping. And that will have some gold coverage, 10%, 20%, 30%, we'll see. But that's why I've said, and that's why Andy Schectman or anyone else can say gold at 30, 20. There is a new direction. We're in the first chapter of gold. 3,100. That doesn't go in a straight line, but this is not the peak gold. Not even close. It's not even close. In fact, when measured against the global money supply, gold today is almost as cheap as it was in 1971. But again, don't say that to speculate. So I can buy 3,000 gold and sell it at 7,000. No, because when gold is at 7 or 10,000, the cost of a loaf of bread or a pair of tennis shoes is going to be a lot higher too. That's not gloom and doom exaggeration. You don't buy gold to get rich. You buy gold to avoid getting poor. And yes, you can certainly take some profits. God knows a lot of, myself included, you buy an extra car, a house, whatever. If you bought gold early enough, it's good times. But that's not the reason I got into gold. If you want to speculate, go into tech stocks and take your risks. But don't buy gold just to get out rich. Buy gold to protect yourself from the destruction of the money that your governments, courts, and frankly, legislatures have poisoned for the last 50 years. Led, of course, by the great friend of the U.S. Kissinger had a famous quote, which no one knows. He said, "To be an enemy of the U.S. is dangerous. To be a friend is fatal." And the West and the G7 in Europe have been following America and our central banks blindly out of fear or necessity. And what have we done? We've been fatal to you guys. You've been relying on our dollar and our U.S. Treasury. It's an ice cube. And now you're still following. And Trump doesn't even care anymore. You're on your own. And it's like, you've got to think, is your Norwegian or European Union or your governor or your president or your local bankers going to solve it for you? No, don't do that. Rely on your own information, your own common sense. You don't have to buy gold through Von Greyerz, but you have to understand gold, not as a gold bug, get rich scheme, not as anything but history and math. And it is rhyming, and it's the same old thing. And whether Bitcoin goes to 1 million or zero, I can guarantee one thing. I can say gold will never go to zero.
Wonderful. Yeah, that was just great. To me, that was, you kind of summed it all up, and quite nice. Loved it.
Well, I hope it helps your audience and your viewers or your friends, anyone who's trying to understand this. And again, I'd say, don't just listen to me or Grant Williams or Egon. Go ahead, look at other arguments. I have too. I try to understand things I don't understand, so I don't have too much arrogant conviction. But I still haven't found a better alternative as an asset preservation, a wealth preservation asset than gold.
Yep.
It's been here for a reason for so many years.
Yeah, wonderful. Matthew, thank you very much. It was wonderful talking to you, and I hope we can do this at a later stage. And
Anytime.
hopefully we'll meet in person as well at some point.
Yeah, absolutely. Of course, Gregor. It was a real pleasure, and thanks for inviting me to swap thoughts with you.
Thanks, Matt. Bye-bye.
Bye.